now. Welcome to this lecture and talk or an event, as you'd want to call it, by Dr. Iwa Salami and by myself. Um, so the event named Bitcoin, can it and should it be regulated? Bitcoin, we know, is always in the limelight. But before we go for the talk and etc., let's do some introductions first. So my name is Hamad Hussain. I'm a lecturer in fintech at UEL. Um, and I've been teaching, I have a background in fintech in the payments industry in the UK. I have worked very closely within the compliance teams and within the ops team. So I know all the process from the onboarding of clients for the payments release, the transaction monitoring, and all of those areas. Um, and I'm here chairing the event. Um, to you, Eva.
Well, hello everybody. My name is Iwa Salami, and a senior lecturer in financial law and regulation. Shall I say fintech regulation now? Actually, at UEL, and I'm going to be taking the presentation. It's actually hoping, that we have an interactive session this evening because, of course, like Hamad said, Bitcoin has and is in the limelight, and also quite a very interesting but also controversial topic. So I'm hoping that this event is going to engender a lot of lively conversations and also questions, if possible. So I'm hoping that we all sort of engage with it and ask as many questions as we can. We'll try to sort of end on time to give room for that.
Yeah,
Thank you.
absolutely. So, guys, to give you a background, UEL, we are working towards a center for fintech, and as a part of that, there will be various such events, and this is the first one of them. Bitcoin, as we all know, cryptocurrency is the new investment asset these days, or is it even an asset? It's very difficult, to a layman, Bitcoin it's very difficult to understand. And when they try and research more about it, they come to this thing that, oh, it's not even regulated. Can it be regulated? It's not regulated. My funds are safe. Are they safe? Am I going to lose them? It's not protected by the FSCS scheme, and I'm going to lose it. But then we see stories of people making millions and hundreds of thousands of pounds through investing in Dogecoin. We have these figures such as Elon Musk and Tesla investing heavily in Bitcoins. And then we have people joining the bandwagon who invest a lot of money. They make money, they lose money. So there was this funny video which I was watching. In that video, someone invested in Bitcoin when the market was high, and then the market dropped. So they got scared, they took the money out. And then when they took the money out, the market went up. So it's like constant up and down of it, right? But even without talking of the up and downs of the market, the biggest thing is whether Bitcoin can ever be regulated and should it be regulated, right? So we have Dr. Iwa Salami with us who will speak to us and share with us her knowledge and her expertise in this, and whether if Bitcoin should be regulated or can it be regulated. Over to you, Eva. Uh, I'll stop sharing so you can share.
Thank you, Hamad. Thanks for that introduction. That's I'd just share my screen now. Okay, so thank you, everyone. I'm presuming that you can. I'm presuming that you can all see the slides.
Yes,
So
Eva.
the brilliant, thanks, Hamad. So the title of the presentation today, as said or as shown in the advert, is Bitcoin, can it and should it be regulated? And as Hamad, just following on from what Hamad was saying in his introduction, there have been issues with this thing. I'll start by calling it a thing, and maybe towards the end of the presentation would have placed it somewhere. There have been issues of, people putting some money in it. You could call that investing, and finding out that actually the monies they put in, because of the fluctuation of this thing, it seems like they're losing much more than they've put in. And then some people getting very scared and pulling out the monies that they've put in. And then after doing that, finding out that actually the value then goes up again, and they're wondering, should I not? And in fact, actually what is driving this price movement for this asset class? As a result of that, there are issues that have to do with the regulation of it, primarily because we have people that are putting money in and experiencing different types of losses, if you like, and therefore there's a need to want to find out how this thing can be regulated. And I'm quite conscious here today that we have various types of people that are on the platform, some experts in Bitcoin and some having next to zero knowledge about it. So what I'll try to do is to pitch it at a very basic level and hope that somehow, the people that know quite a bit about it will be able to also contribute in a way that we can all engage in this, in a useful conversation around it. Okay. So the next slide basically it tells a story, if you like, and the story the next slide is telling in a nutshell is about why a lot more people are interested in wanting to have Bitcoin, okay, relative to fiat currency. And the fiat currency referred to here or represented here is the US dollar. So we've got the $20 bill, I'd say sort of on top of the first picture, and we're looking at dates. So somewhere in 1998, you're able to buy a lot more grocery, if you like. We're talking in terms of sort of groceries from the shop with your $20 bill. Okay, but as a result of inflation, by 2005, you're getting less and less for your money, and significantly so in 2014, 2017, and 2021. And basically, what that picture is telling us is that due to the inflationary impact of a standard fiat currency, we're getting less and less and less for our money as the years progress. And then if we look at the converse side of things, looking at Bitcoin, this thing, right, it appears that if we're tracking dates, so if we look at 2011, we're getting not as much as we would have gotten in 2013, but as we progress along the years to 2021, we're getting not just only certain things more, but we can also afford, quite expensive, items such as fancy cars and you name it. And so this sort of paints a picture of why a lot more people are interested in this thing. Is it something that if we invest in, we're going to get a lot more money out of, or exactly what is it? But the one thing I find quite interesting, and I'm going to come back to this picture at the end, is there seems to be gaps in between 2011, 13, 14, 2017, and even between 2017 and 2020. So it seems like there are gaps, and I think quite significant gaps too, that are not mentioned. And it almost feels like we've captured the brilliant parts of this asset class. But really, what is it? So this presentation is going to ask the following questions and attempt to answer them. So the first question is, what is Bitcoin? Why is regulation an issue? Why do we talk so much about regulation when it concerns this asset class? And in fact, can it be regulated? And should it be regulated? So these are the very simple questions I'm going to try to ask. Not very easy answers to them, but I'll try to see how we can proceed with the questions and with these questions, and hoping that we sort of have a lively discussion afterwards. So what is Bitcoin? So Bitcoin really is, to put it quite succinctly, is a digital representation of value. It's powered by distributed ledger technology, and the specific type here being the blockchain. And the idea around its creation was to facilitate a peer-to-peer exchange, if you like, of this digital representation of value, okay, without necessarily engaging a central administrative authority or a central authority such as a central bank or a bank or government or any sort of intermediary that people will be able to transact on this basis without having to engage an intermediary. And the idea around it was initially that it will help prevent the types of circumstances that occurred during the 2007 to 2009 financial crisis, where a lot of people that had invested in that had investments and had engaged with investments felt that they were harmed by, if you like, by investment institutions, investment banks, and the like. I'll try to mute all. Okay, and so the idea was that we would have that people would be able to transact on a peer-to-peer basis without necessarily involving intermediaries. And like I had said, obviously the financial crisis had particularly created a situation that encouraged people to want to use intermediaries per se, to keep it quite simply. But in doing that, there was also a drive by libertarians, okay, to want to be in more control of their money, more control of the finances, more control of how they transact without necessarily engaging central banks and governments. And so again, the idea really was, if you like, pushed ahead by libertarians, that there would be a place, so there's a useful place for people to be able to transact financially on a peer-to-peer basis. There was also an idea around it being some sort of internet money, okay? Some sort of internet money that would allow people to be able to engage in this way. But it hasn't actually fulfilled the characteristics, the legal characteristics of money. And therefore, what we're finding now over the past few years since the launch of Bitcoin in 2009 is that it's much more embracing an asset class, a financial asset, precisely. So we speak in terms of Bitcoin as the king of all crypto assets or cryptocurrencies, as they previously used to be frequently referred to as. But then there are other types of assets have evolved, if you like, from Bitcoin, and which also have similar characteristics as Bitcoin. And for these, we call altcoins. So any crypto asset that isn't Bitcoin, if you like, we call altcoins. Okay, so so again, generically using Bitcoin here as to refer to this asset class, crypto assets. Okay, but then a lot has happened from the launch of Bitcoin since 2009, and I think so much has happened actually. But I'd say one of the most significant things that have evolved or come out of the launch of Bitcoin is this tendency to want to see how this asset class can be used much more globally. And I'd say the closest perhaps to that has been the Facebook's proposal to launch its Facebook, what used to be known as the Facebook Libra, but now known as Diem. And I have to say a lot happened. I mean, we're talking between 2009, the launch of Bitcoin, right up to 2019, when Facebook announced that it was interested in launching its own private global stable coin 2019. I've pretty much fast forwarded because I really want to home in on Facebook's launch and what it has, what the various things that have come up from that proposal. So Facebook decided to launch its Diem, previously Libra, and the idea around that was that this would be used as some sort of stable coin, okay, to firstly, if you like, deal with the problems that Bitcoin had, in that it fluctuated quite significantly, and therefore creating this sort of stable coin that would be able to be used on quite, I'd say, global platforms like Facebook and WhatsApp, and possibly also Instagram, right? But this agenda obviously hit a lot of, criticisms, and wasn't able to go further because regulators, particularly in the United States, sort of stood against it, primarily because of the implications that it would have for monetary sovereignty, and monetary sovereignty here, not just being the US dollar for the US dollar, but also for other currencies that may, for other countries whose citizens may end up wanting to use this Facebook Libra at the time as the main currency to transact, particularly on platforms like on platforms like Facebook. Okay, but one of the things that this proposal by Facebook did was to then engender a reaction from central banks across the world, including the People's Bank of China. And China, I think, was the central bank in China, the People's Bank of China, I think, was one of the first countries to begin to highlight that they were taking steps to introduce, if you like, a counterpart, if you like, towards this Facebook Libra and its implication as a global currency. And the idea really was that they were going to want to introduce a central bank digital currency. And fast forward till 2021, I have to say that quite a number of central banks are exploring the issuance of central bank digital currency, and exactly what this means, what this would mean for their countries if they decide to actually go in that line. Of course, there are huge implications here for how this will be implemented and how it's going to be administered. But it's the reason why I've sort of mentioned this is that from 2009, when we had the launch of Bitcoin, quite significant things have actually occurred that are not just that are really issues around, or raising issues both nationally and also globally, for which policymakers nationally and internationally are actually taking quite seriously. Okay. So if I go back to Bitcoin, that was just giving an overview. So if I go back to Bitcoin, why does regulation come up ever so frequently when we speak in terms of Bitcoin in itself? So Bitcoin here being the crypto asset that we're looking at. So initially, when Bitcoin was launched, and a few years after its launch, it was linked with a lot of financial crime and activities happening in the dark web. So things like money laundering, things like the issuance of fake passports and drugs and the like, okay? And primarily as a result of the fact that when people are transacting using Bitcoin, they're transacting behind codes. When people transact behind codes, their identities are covered up. So one of the earliest issues around regulation for Bitcoin really was around its ability to facilitate crime and all the terrible things that happen in the dark web that are paid for using Bitcoin. Over the years now, since well, I'd say just over the years, it has become very clear, particularly through RegTech solution, regulatory technology solutions providers, and some fintech providers as well. It's become clear that actually activities that happen on blockchains can easily be tracked and traced back to their origins. So we've got software solutions providers like Chainalysis, Elliptics, who've been able to actually trace back illicit activities to certain sources. because all the activities registered on a blockchain, for example, are recorded. Okay, so other aspects of regulation have been the issues around investor protection, and issues around investor protection has really sort of, have been linked with things like the wild volatility associated with Bitcoin, and the wild volatility associated with it predominantly issues around why that's the case and who is driving this action. And the issues around who is driving this action, we'll be talking about in subsequent slides, but again, linking up to there being so many people, there have been quite a few people, actually, not so many people, a few people who hold huge amounts of Bitcoin, and therefore who possibly are able to actually manipulate the prices, manipulate how it goes up and how it goes down, depending on how they conduct themselves around this asset class. Okay. But beyond the investor protection issues linked with the volatility, there have been also issues around investor protection, or that have created an interest for investor protection, linked with the level of security that exists within cryptocurrency exchanges that help both sell these assets or grant access to these assets to potential retail investors being people like you and I. And therefore, the degree of security around the conduct of those or management conduct of those exchanges, primarily because those exchanges have been subject to things like hacks and history. We've had time and time again, dating up to even this year of exchanges being subject to hacks. And when the exchanges are subject to hacks, then some retail investors who have their monies held on those exchanges are then exposed to huge losses. So again, these are issues around sort of investor protection. And then also investor protection around a lot of retail investors not understanding this asset class. And because they hear that there's huge potential to actually make money, what they then tend to want to do is to just sometimes put in all their savings into this asset class, and then find that there may be potential to lose monies when the price drops significantly. So there are huge areas that attract regulatory interest, particularly for investor protection. Okay, and then of course there are huge linkages with, or huge issues around, the financial stability implications of this asset class. So previously, this asset class wasn't one that attracted a lot of concern, if you like. So a few people round about the origins, if you like, when it was launched, Bitcoin really wasn't. People didn't see Bitcoin as posing any harm, posing any threats, and for a long time that was the case, up until somewhere around 2017, when the price began to increase exponentially. Okay, and the price has carried on. I mean, it suffered a few wild fluctuations in between, but then the price has carried on increasing. And more now than ever before, we've seen the value of Bitcoin is now over 1 trillion. The market capitalization is over $1 trillion, unlike before, where if there happens to be some fundamental error or significant drop, that amount locked into it, there wasn't a fear that could shake, if you like, financial markets. But with this amount of increase, there are huge potentials here now for considerations around the impact for financial stability, and more so because we're getting institutional investors interested in the space. So we're seeing a lot of investment banks expressing an interest in wanting to engage or invest or expose their clients to this asset class. Okay, and also private equity firms, and also secular firms such as Tesla, or quite high net worth entrepreneurs as well, sort of engaged and interested in the space, but mostly institutional investors. That's where the concern lies for financial stability and its linkages with traditional financial services. And then, of course, we're seeing huge issues around regulation, around markets integrity. So linkages with, market abuse and behaviors that need to be regulated. So there are linkages as to, for example, exchanges not being particularly focused on, not being aspects of their transactions and their trading activities not being sort of brought under regulatory scrutiny, and therefore creating opportunities for market abuse and different sorts of activities that then don't ensure that we have a level playing field for all to engage in. Okay, and so again, I'm going to be talking more about this, time permitting, in the next few slides. So these are really the main concerns around regulation and regulating Bitcoin. Now, Bitcoin again being the example here for other asset classes. But the question then is, but can it be regulated? Can it be regulated? Because it's not your traditional type of financial asset. Can it be regulated? And the question really is, it's not a very easy question to answer, because it's our current traditional regulatory framework can't regulate it. Okay, why? Because it's distributed, they're largely distributed open source, which means that they're decentralized, which means anybody that's connected to the network, or anyone can connect to the network. Okay, it's not controlled by a company or an entity or a person, and therefore it becomes very difficult to actually regulate the way the actual network operates. Okay, so regulation of Bitcoin and the Bitcoin network in itself is doubtful. Okay, which is the reason why certain jurisdictions may have resorted to banning it completely. Okay, and I'm going to be talking, about the approach to regulation in the next coming slides. Okay, but can aspects of it be regulated? Yes, aspects of it can be regulated, and I think where regulation can come on board, and where we're seeing that regulation is coming on board, it's at the point where it intersects with our traditional financial services, where it intersects with fiat monetary systems, and primarily seen through the operation of crypto currency exchanges or crypto asset exchanges. And we're already seeing regulation coming out from that, from those areas. So for example, we have had the Financial Actions Task Force, which is the global standard setter, if you like, the global policeman or the watchdog for anti-money laundering and terrorism financing, coming out to impose what is known as the travel rules. Now, these travel rules is really around requiring that cryptocurrency exchanges, as well as other virtual asset service providers who could basically also be institutions that actually engage in the space, providing opportunities for people to transact in cryptocurrencies, requiring that they fulfill what is known as a know your customer requirement. Okay, so the Financial Actions Task Force introduced the travel rule, which really was a rule that was introduced for that we find in our traditional international banks, which is really around the fact that parties that are transacting from the origination of a currency to the destination of the currency should actually reveal their identity. So there should be an exchange, really, of information So the parties transacting from one cryptocurrency exchange to another should be able to exchange information of the information of the parties that are transacting across or with each other. And to a certain extent, that has been taken on board by the UK FCA, taken on board by the US FinCEN, and also by a number of other jurisdictions. Now, there are limitations to the effective of that as well, but the limitations arise with respect to the standard of regulation across the world. So if we have quite high anti-money laundering provisions in a certain country, or a robust anti-money laundering regulatory framework in certain jurisdictions, such as, for example, a jurisdiction that's originating the transfer of crypto assets to another jurisdiction, possibly maybe a jurisdiction that doesn't have as robust KYC or AML, anti-money laundering framework, then what you would have is a situation where the entire regulatory agenda or regulatory regime, isn't as robust as we would like it to be, because we're dealing now with countries that have different strengths and weaknesses, if you like, for regulation of financial, for their financial systems and financial industry, and that won't be different for the regulation of cryptocurrency exchanges. Okay. Huawei, one major gap, whilst we're seeing huge opportunities here that countries are sort of taking on board regulating exchanges from a KYC perspective, one area that is fundamentally lacking is actually the regulation of trading activities on these exchanges. Because one of the things that are constantly coming out is that the behaviors and reaction that then affect the fluctuation of crypto assets, such as Bitcoin, is really down to how those assets, i.e. Bitcoin and other crypto assets, are being traded on those exchanges, a lot of which isn't visible to regulators, and in fact, a lot of which isn't transparent to the market generally, which of course goes against the whole rationale for regulation, which is that we want to facilitate a level playing field for all investors. Now, I have to say that I know that the provisions for RegTech solutions, and that this is being worked on to introduce solutions that can help track behaviors on these exchanges through RegTech solutions, and RegTech meaning regulatory technology solutions. Okay. So the next question I have is, but should it be regulated? And my answer to this is, to the extent that the crypto asset and virtual asset service providers, so crypto asset exchanges and virtual asset service providers, can be regulated. Okay, so the Bitcoin network in itself, like I said earlier, is going to be a challenge to regulate that, but to the extent that they intersect through cryptocurrency exchanges and other virtual asset service providers, such as wallet providers, then they should be regulated, given the list of regulatory concerns that I listed in the, I think in the third slide. So investor protection, prevention of market manipulation, financial stability issues. Okay. So talking a bit now as to the policy stance that has been taken by a number of countries, whether it's India, Nigeria, China, before they did a U-turn, the idea of banning this asset class or banning transactions in Bitcoin, I'm not sure is going to be one that can stop or one that's effective enough to deal with the problems that I have sort of highlighted, whether that's investor protection, financial stability, and the like. Because for as long as the network, which can't actually be shut down, okay, exists, and for as long as people are actually transacting on it, it becomes whether or not laws ban them, we can't really necessarily stop transactions happening on them. They can be disadvantaged or discouraged, but in terms of sort of banning them, the precise effect of banning them, I'm not sure the extent to which that can be effective on the long term. Okay, on the long term, what in fact should work would really be that jurisdictions are beginning to sort of look at opportunities to strengthen the KYC requirements, your customer requirements around virtual asset service providers, such as crypto asset exchanges and wallet providers. So for regulators to actually come on board, strengthen provisions for those, bring on board RegTech solutions that can help facilitate these types of activities, because they exist, whether we're looking at analysis, elliptics, that help track and track behaviors happening on exchanges. These have a track record of success. Okay. Another area that really needs to be looked at by all jurisdictions really is being able to track activities happening on these cryptocurrency exchanges, which is an area that's quite rife for regulation. But I think perhaps the most interesting slide is this slide here, which really looks at the really fundamental issues with Bitcoin in itself. Now, Bitcoin in itself as a crypto asset. So one of the issues that we see that continuously comes out is that when we compare Bitcoin with other asset classes, whether we're comparing it with stocks, bonds, real estate, gold, it doesn't feel that there's an intrinsic value that exists in it, or there's some sort of utility that can be derived from it. But it seems that the value seems to be driven pretty much by speculation, how people that hold huge amounts of it, people that are classified in the industry as whales, it seems like in the way that they feel, if they decide they want to sell huge amounts, that drives down the price. If they decide they want to talk up the asset class, that drives up the price. And really pretty much the way that we've seen recently the price of Bitcoin rise and fall on the basis of different reactions in the market and on the basis of who said what. So in the week, for example, that Elon Musk Tesla invested $1.5 billion dollars, we saw a massive rise in Bitcoin, and not just only Bitcoin, altcoins as well, the entire asset class. And we've seen things like, well, so that's a big issue. I'll stop there because I'll talk about the other points in the next point, actually, when I speak of Dogecoin. So the issue really is that we don't have, unlike when we buy gold, we're getting out, utility. We can, we can make jewelry out of gold. If we're engaging or investing in real estate, we get rents. We get, if we're engaging in stocks and bonds, we get interest, coupons. But really, there isn't any intrinsic value per se in this asset class. It seems that the price is driven by speculation, and speculation much more driven by huge individuals who hold huge amounts of it. And of course, then that places the entire, other types of investors at risk, and again, and a concern, actually a regulatory concern. Okay. Also, the cost to the environment is quite energy intensive, not particularly ticking the box for us in terms of issues around climate change, hugely energy intensive and not friendly to the environment in terms of the mining of Bitcoin, which is the way more Bitcoins are generated, and also in the way that the network is managed as well. Okay. And then questions around whether it's truly decentralized. So the libertarians and those that argue that this is brilliant because it cuts out centralized organizations, intermediaries, central banks, allows people to transact on a peer-to-peer basis. The question is, how really decentralized is it? I mean, recently, I think it was on the 17th of April, we noticed that the price of Bitcoin dropped by more than 8%. And that eventually was down to the fact, we found out eventually that that was down to the fact that there was a blackout in the Chinese province of Xinjiang, which is a region that that really mines or is responsible for mining almost half of the Bitcoin network. And what we found was that it was a region that caused almost half of the Bitcoin network to go offline, because that region plays a quite significant role for mining happening on the Bitcoin network. Okay, so I mean, if we have over half of the Bitcoin network going offline for an event happening in one region, in one country, it makes us question the extent of decentralization of this, the Bitcoin network itself. Okay, and then also, and the issues around huge networks also happening, huge mining pools or mining provisions in Russia as well, and that a lot of the mining is centralized, and arguments that a lot of the mining is centralized by in very few countries and very few players. Okay, and then of course we, over the past few weeks, I'd say about 2 weeks, we all of a sudden found a certain asset, crypto asset called Dogecoin that really doesn't really have any fundamentals attached to it. Just go up and up in value, and this particular asset class is one that you know is attractive to quite young people and quite young investors, and all sorts of stories coming out of this asset class, this crypto asset. Of a lot of people want to sort of invest in it because they're finding that the value is increasing exponentially. But when you look at the origins of this asset class, Dogecoin, there really isn't nothing to it. In fact, history has it that it was created as some sort of play, as a joke, for people to sort of, you know, play with nothing really intrinsic in it. And so when you have a huge amounts of people, when you have people investing hugely in this type of asset class, and when the price eventually goes to where it really should be, because there isn't really much attached to it in terms of what it's contributing to the industry and to the space, and prices drop and people lose out, then those investors lose out. Okay, those particularly here now, retail investors lose out. And then issues around whether Bitcoin in itself is a Ponzi scheme. Okay, whether it's a Ponzi scheme, whether it's, you know, in the way that it works, whether the few people who are able to drive up the price due to sort of purchasing a lot of it, and then at their whim, able to sort of, if they like, sell a significant amount and then drive down the price. And in all of this, engage in a win-win situation for them, leaving other types of investors, particularly retail investors, to suffer a loss. Obviously, retail investors that hold, you know, small amounts, but who want, as a fear of not missing out, not wanting to miss out, who want to actually hold these types of asset classes but lose out because they've either bought at the very high end and the value has dropped again. But one of the things that critiques, when I raise this point, says that, well, this is like digital gold. In any case, the value is just going to keep going up and up. Yes, it may have problems, but it's just going to be an upward trend. But these are questions I've thrown here because even if it's going to be on an upward trend, what's driving it, I think, is the fundamental question we all need to be asking ourselves. You know, what's driving it? Now, having said that, I have to say that there are other altcoins. So we've got the Ethereum, which is also a network that also has a governing coin, if you like, or token called Ether. Okay, and with Ethereum, they seem quite a number of innovative ideas and innovation that have potential appear to be linked with it. So with Ethereum, for example, Ethereum has come up with this smart contract. I think somewhere quite early on, the idea around smart contracts, which has enabled decentralized applications to be built on them. And then what we're now seeing happen or evolve is, if you like, an alternative type of financial system existing in decentralized finance. Okay, and basically decentralized finance is where we actually grant people the opportunity, or participants, okay, the opportunity to engage in financial transactions, again, without intermediaries, whether this is investing, borrowing, lending, and also now we're seeing insurance, without necessarily using intermediaries, but the smart contracts actually enable this. Now, there are huge developments in the space that have potential for positive things. Obviously, in comparison to Bitcoin, it appears that this seems to be contributing to much more the creation of an ecosystem that facilitates much more peer-to-peer transactions. Okay, and then also the other projects coming on board now that seem to be less energy intensive than Bitcoin. And there's all sorts of projects in this area coming up that people are quite looking forward to, and seeing how these will contribute to actually contribute to the entire ecosystem, or the industry, if you like. That's the crypto asset industry moving forward. So now, going back to the future of money, I sort of started out sort of saying, well, crypto assets were, one of the ideas around it was that it was going to be deemed as a certain type of money. Well, that hasn't resulted as I've tried to track, but one of the things that has certainly come from the launch, or since the launch of Bitcoin in 2009, has been these central bank digital currencies, and the potential that could have for financial inclusion, including people that do not have access to traditional financial services, may not be something hugely coveted in the West, but something that can be hugely significant for emerging and developing countries. Okay, so there are huge potentials here, but again, this of course needs to be worked out, because there are, all sorts of issues as to who will. What role would commercial banks play in the space, if at all any, and will central banks be able to directly serve citizens that have been provided wallets, for example, for these types of central bank digital currencies? There's all sorts of issues around that a lot of central banks across the world are sort of working out. So I'd like to stop here. Obviously, I've spoken a bit, trying to sort of pitch the level, quite aware that there are quite a number of people on the platform. I've noticed some of my students here who know very little about Bitcoin and crypto assets, and also quite conscious that there are quite a few people here that will know quite a bit. So I'll stop here, and I'll transfer back to Hamad, hoping to get some quite engaging conversations on the presentation. Thank you.
Iwa, first of all, thank you so much for giving us such a brilliant insight and explaining to us so much about Bitcoin and whether it should be regulated, whether it should not be regulated, the complexities around Bitcoin. We have a few comments and we have some questions in the chat. So the first question is, who owns Bitcoin?
Okay, all right. So I am wondering, sorry, just bear with me 1 minute. Yes, all right. So who owns Bitcoin? So that's the thing. Like I said in the first slide, it's decentralized. And I have to say it's a good question, because the origins of Bitcoin is still very up in the air. Okay. The white paper was supposedly written by someone known as Satoshi Nakamoto, but to date we don't know who that is. Okay, some people have come out to say that they are Satoshi, but we don't know who that is. Okay, so in terms of who owns it, it's a network that's distributed open source, which is accessible to anyone. So no one owns it, because if someone did, then it would be easy for us to be able to access such a person and then require such a person to be subject to regulation.
Thank you. Thank you so much, Eva. There's a comment. It says there are several areas of regulation that look like they're coming pretty quickly. These include reporting for tax purposes and regulating initial coin offerings the way that securities are regulated. So I think that's a very valid comment. Even a lot of lawsuits and a lot of things that capital gains tax and etc. on Bitcoin. So yes, absolutely, lots of things. It's a changing world. It's a very dynamic world. Then we have a question from Marilyn. In one of your papers on terrorism financing 2018, you had used the term virtual currencies. I'm interested on why you have now adopted the term crypto assets.
Okay, well, that's a very good question, because one of the things that we all know is that the taxonomy for this industry, taxonomy meaning the definitions that should be attached or attributed to the use of words or terms, it hasn't been clear. So crypto assets are, if you like, a much more distinct type of asset class. Virtual currencies are really bring on board or connote huge amounts of other types of assets that can be transacted virtually. Okay, and virtual currencies, for example, we had some examples of virtual currencies that were transacted on, currencies transacted on the internet way before the launch of Bitcoin. So virtual currencies is much more generic a term to use to refer to any type of, and using the term currency loosely now, that can be transacted in the virtual space, okay, on the internet. Okay, whereas crypto assets, we refer to crypto assets since the launch of Bitcoin, primarily as a result of the cryptography that was woven into the way that these types of assets operated. And not just only that, obviously Bitcoin had various other contributions from the perspective of what it added to what didn't exist before. So things like avoiding or dealing with one of the challenges that existed with traditional type of currencies, which was really dealing with what is known as a double spend problem for an asset that's digital. Okay, so in a nutshell, really, virtual currencies really speak generically around those types of asset classes that can be transacted on the internet, and there were quite a few that existed way before way before Bitcoin. And that paper was a very brilliant paper. I wrote the paper, but the paper had referred to other types of asset classes and gave examples to those as well.
Okay, thank you, Eva, for the clarification and explanation in so much detail. There's a comment from Martin Walker. He says, "Great talk, Eva."
Thank you, Martin.
There's a question from Michael who says, "Is it like buying gold, keeping for a while and sell for higher value, or can it be used as a form of payment for products or services?"
Okay, so that's a very good question, and one of which I tried to sort of answer in the presentation. A lot of people, probably the reason why you asked the question is because you probably heard someone say, "Oh, this is digital gold." I beg to differ, to be honest. Digital gold, I don't know. The one thing that concerns me around this asset class is because I still can't see I still can't see the utility attributed to it. I still can't see the intrinsic value attached to it. It still seems to me very much as an asset class that's driven by speculation.
Okay.
So we don't know what the price. We know what the price is today, but we don't know what the price is going to be tomorrow or in 5 years.
Okay. Thank you, Eva. Just continuing from that point, there's a question. Is Bitcoin forever, or it is possible that it will not be tomorrow suddenly? I mean, can it just go off?
So my understanding of the technology is that it cannot be, the source code cannot be shut down, which means that it's for as long as people are willing to use it, it will continue to exist.
Okay, thank you.
Now, regulators can ban it, in which case that can shift a lot of attention away from it, which then of course can affect the price. But in terms of shutting it down, no.
Okay, brilliant. Just staying conscious of time, we'll take one last question. That is, could you shed some light on the mining of cryptocurrencies?
Okay, all right. Well, I have to say that I'm not a very technical, I'm not a technical person. And thank you, Ahmad, for throwing that in as a last question. But as far as I'm aware, part of the way that cryptocurrency network operates to guarantee their security is that in order, well, particularly now in the case of Bitcoin, in order to be able to produce more Bitcoin, there's a requirement that quite difficult mathematical sums have to be cracked to be able to do that. And I'm aware, or they tell us, the technologists, that this in cracking this sum, this is the way that somehow security of the network is built. But then in order to be able to achieve this, you need really very powerful computers to be able to achieve this and to be able to achieve, the creation, particularly of Bitcoin, in this way. Okay. But I have to say, this is not an area that I've explored significantly, because I'm much more inclined to the regulation and the asset class coming out of it, the utility coming out of it, if at all, and the implication it has both for investors and financial stability.
Okay, thank you very much, Eva, and thank you so much all for your questions. Apologies if your question was not answered or we just short of time, but thank you so much for joining. Stay tuned. There will be more events. There will be more talks around fintechs, bitcoins, and etc. So keep an eye out. Thank you so much for joining. Thank you so much, Eva, for the brilliant talk. And this is it. Take care, everyone, and bye bye from our side.